Hello, this is Stephen Lazar with Greater Austin Tax, CPA that does Texas sales tax issues. This is an update on things out of the comptroller's office or associated with the comptroller's office for the month of October 2025. So we've got a number of Texas Register type items, nothing particularly meaningful there. A couple interesting hearings slash policy documents, and we'll try to breeze through them as quickly as we can, getting through all this. So without further ado, let's look at these Texas Register items. So again, all we're doing is we're looking up the comptroller. Ooh, we have one thing here associated with tax administration. This has to do with the fireworks tax. Sellers are no longer required to do this. We talked about this previously. Fireworks is now, it looks like at least, fireworks has been just subsumed by standard sales tax. And we'll see this in a later document. So that was the third. Next, we've got this public accounts, review of agency rules. Now, quite frankly, this is associated with prepaid higher education tuition. Oh, interesting. Proposes to review these areas. The review, at minimum, whether reasons for readopting continue to exist. Nothing here is associated with sales tax. You may find more interest in it. I don't, really. 17th. Comptroller, are you here? You are. Wait, hold on. Hold on. No, you're not. That was a sneaky little non-comptroller. 7 here. Let's go to T. 2 more points to tax administration. This is associated with the liquefied gas situation. Doesn't matter to us. What about this one? This is also associated with the liquefied gas situation. Irrelevant to us. Cool. Let's see if there's anything that came out on Halloween. No, nothing did. So nothing relevant out of the register. That's quite common, quite frankly. Now we've got the October documents. Again, October. Really, we're just looking at sales tax. Switch over to that. And I've got my stack with notes here at a high level. Let's see, I think there's like 10-ish. It's not too many. Going through this first one, Kathy Pickup is the ALJ. This has a... It's a little interesting for a couple reasons. So this one, petitioner installed solar panels. This is associated with solar panels. They provided some documentation, not all documentation. The auditor estimated cost of materials to be 50% of the total cost of goods sold. I don't know where this came from, but I'm noting that, hey, apparently the auditor thought that was reasonable associated with this. They had no submissions. It was basically the guy just talked about it. Petitioner did not state contentions, make argument, or submit evidence for the written submission hearing. Yeah. Not how you win anything. The petitioner did not submit contentions, evidence, or argument for the hearing and therefore failed to meet the burden to demonstrate audit error. Yeah, that's pretty obvious. Let's see if there's anything else. All billings were done in lump sum. Yeah, we know about that. The 50%, we talked about that. Yeah, that's the interesting and meaningful points. The 50% if it's not obvious. Generally, 50% for construction cost of goods sold seems high, quite frankly. I don't know where that number came from, besides the auditor not having any information and just saying 50%. Next one, 35. I've got, no. This one is 25 pages. This is an exceedingly interesting situation, and we're just going to go over why it's interesting. If you are actually in the practice in this space, this is the one that you need to read this month. So they audited these folks. No notice of issue. 1 second. I want to go back up for just a second. I'm trying to see who. Someone represented the petitioner. I believe. I guess maybe it's not on this one. So they are a glass manufacturer, and they have a significant amount. 52 exhibits were entered into evidence. And so there's a number of different issues at play here. So upgrading the electrical equipment to a facility, rewiring with specialized wire to replace transfer. So as you may know, when you have a manufacturer, there are certain things that manufacturers can get associated with these sorts of things. And they were denied here because the evidence presented did not live up to the standard. There were a number of things where the audit division and the ALJ saying, hey, it's not clear and convincing, denied a very significant amount of documentation. So this isn't even, hey, we didn't have anything, we just went in and lost. This is someone tried really hard, presented a lot of documentations, and still did not work. For whatever reason, I think this was like an internal person doing this, and I feel like getting some outside counsel. This one especially, if we're presenting this sort of documentation, I would lean towards an attorney. Makes more sense here, especially if you're doing this in the hearing space. That probably would have helped. Just going through a couple of the lines, there is no contractor evidence. Petitioner also cited this in support of its claim. Oh, and this is the necessary for manufacturing. This is something that the Comptroller's Office seems to be saying, hey, you don't have sufficient evidence for this, contrary to, I would say, common sense. So on issues associated with that, hey, that one, that pushes it towards an attorney as well. Just going to go to the analysis real quick. And we're just going to say, ALJ finds the petitioner did not demonstrate by clear and convincing evidence that the furnace was exempt. A furnace for a glass blower. Someone whose literal entire business is heating up certain materials like sand to make them molten. They're saying, no, that's not clear and convincing. That has anything to do with manufacturing. Like, it's bad. Again, I don't know how they're able to recently take this position, but they did. We continue to have this situation. The ALJ and probably the Comptroller's Office made a big note of, oh, the oil that they're getting for their machines is fishing reel oil, gun oil. Oh, it's for other things. It's not associated with manufacturing. Again, this is just this is the sort of thing that needed outside counsel to help resolve, and hopefully it's still going to be moving in that direction. Again, this is reasonably meaningful. There's a lot of good information here. I don't want to spend that much time on this thing, and I've already gone over it. I'm gonna go real quick to see if I have any other high level notes. Yeah, we're fine. Okay. So again, go read that one. This letter is associated with Ready Mix Concrete. I'm going to read a bit of this one. Dear whoever, we issue this private letter ruling in accordance with Rule 3.1, private letter ruling and general information letters. This is associated with a March 20th, 2025. So I'm mostly noting this just to say, hey, this came out, they're saying September 5th. Okay, but it was published in October. It went to them in September, went to us in October. Okay. March, April, May, June, July, August, September. 6 months. Took them 6 months turnaround associated with this. Facts presented. Taxpayer manufactures ready-mix concrete at 3 plants. Each plant has a separate phone number for contractors to call and place concrete orders. No local jurisdictions imposes local on A. County has something on B and C. After receiving an order, the taxpayer prepares the concrete aggregate, places it in a mixing truck, and delivers it to a job site. At the job site, the driver attaches the delivery chute to the truck. Once the client's concrete finishers are ready, and that's one of the most important lines here, taxpayer starts the concrete flow. The client's concrete finishers are responsible for preparing the concrete form, smoothing up the concrete, and directing the concrete chute to areas where they want the concrete deposited. Occasionally, taxpayer's driver delivers the concrete to the contractor's pumping truck, and the contract finishers pump the concrete from their pumping truck. It says the, but it means their pumping truck to the desired final location. So, is the taxpayer a ready-mix concrete contractor? No, they're not. They're a seller of materials. And then they're talking about local sourcing because of, and it's going to go into more of the details associated with it. This is you start with the location. In this case, 6 1/4 for A, 0.5s for B, and then you are delivering to other areas. If there are other taxes at that job site, that's where you need to pick those up. And then this is basically where it's saying that. Taxpayers are required to collect all local taxes in effect at the location of its place of business up to a maximum of 2%. If the local sales tax in effect at the place of business does not reach 2%, they may be required to remit an additional local use taxes, specifically use taxes, for those jurisdictions that impose a tax at the delivery location. Again, exactly what I just said, just instead of me saying it, it's written right there. Is there anything else interesting associated with this? This one. Just a fun little bit that creating concrete for immediate use, such as ready mix, it means something completely different than being like a ready mix contractor. And that's probably why you've got, at least in Texas, the people who deliver concrete and the people who actually finish the concrete are different companies. Okay, so that's that one. This 42. This is an estimated one. So we have Kenesha Washington, Lisa Craven. Here's the audited petitioner. Sent to hearings. This was the video conference one. Okay, I'm starting to recall it. So, evidence presented. They presented some evidence. A tax audit analysis. I don't know what you mean by that. Petitioner bank statements. Federal tax form. The 1120S is like the kind of like income statement or like shoot, man, I'm showing my federal non-knowledge here. The main for your 1040, but for S corps. Anything else? Statement of ground, position letter. So they presented some analysis and documentation at this. Uh, they operated 2 Mediterranean food restaurants, and this fun one. They got hit with fraud penalty, if I'm not mistaken. And they were trying to say, hey, we don't we shouldn't get hit with that, please. Let me just make sure. No, they're not. This is the one where they said they did not understand their POS system. Right? Just double checking POS reports. Okay, because petitioner did not provide POS reports or detailed transaction level documentation, the auditor estimated additional taxable sales for this. Very standard. During petitioner provided additional documentation based on amended federal tax returns based on the documents were the bank statements. Therefore, the auditor conducted a reconciliation using the bank statements. Total deposits. And then subtracted bank rewards, deposits that were not business related, loans based on supporting documents. Yeah. Then subtracted taxable sales. This is always a procedure that if it occurs, it trips up a taxpayer because generally they don't have documentation to support everything that is not sales. Like if we have a transfer between 2 bank accounts, how do we know that that's not associated with the sale? Well, that's the crux of the situation. We have to find something that gets you there. Okay. Contends that accurate calculation will require additional subtraction of tax paid during the audit. So this is the fun thing. Petitioner disagrees with the estimation procedure. Petitioner's contention that the tax paid should be subtracted again would result in double accounting. So in short, I would assume that the Comptroller's office loves seeing stuff like this, where they make a claim, they did not actually do the calculations associated with the claim or had a CPA review it, and doesn't get what they need. Yeah, that's my big note here. It looked like someone who has more expertise in accounting and auditing should have been on their side associated with it. But that's it. This one I didn't find particularly interesting. Next. This one's got some. So I'm going to, real quick note, indexed by tax type only. So that means that there's not really anything going here. Oh, this is the POS misunderstood one. POS comes up way too often in these. Okay, here we go. So going to the top, just very quickly, hey, this is, as you might have seen, this is associated with mixed beverage. Believe this is a bar. I mean, it's for mixed beverage gross receipts tax. Yeah, and I believe it was, Olivia Suarez. So this was likely in Austin, unless she's moved. They did standard stuff, blah, 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 blah. They got the 50% penalty associated with it because the overall error rate was above the threshold in which they enforce it. Now, petitioner argued gross underreporting was due to poorly installed and maintained POS system and the failure of the bookkeeper it employed to calculate and remit its mixed beverage and sales and use taxes. Both of petitioner's witnesses explained that they had been using the POS system at the restaurant for several years prior to the audit, but they were not confident that it was installed correctly. In what world is that a strong argument? Why would that mean that the state should relieve you of some sort of penalty associated with it? Obviously, hey, fraud penalty, the state's position is if it's above 20, I always forget this, if it's either 20 or 25%, you automatically have this fraud penalty, but there isn't an establishment of scienter or an intent to deceive. So my expectation would be if they had gotten competent outside counsel to help them through this, there was a higher likelihood they would have come to. There was 100% likelihood that they would have come to a more compelling argument than, well, we installed it wrong and we never fixed it. Cool. How does that mean you shouldn't be subject to this? It doesn't. It just doesn't. Okay, that's that irritating one basically. This one. My notes here are kind of weird. Who is this? Okay, so let's go through this. Provided production equipment and personnel for events such as acoustic and concert services. Okay, that makes more sense. Going through this, I'd assume this. Let's see. Do we know what auditor this was off the top? Janice, claim represented staff. No, but that's okay. I was curious about the auditor, but it doesn't matter. Petitioner operated a business that provided production equipment and personnel for events such as acoustic and concert services. They get audited. Taxable purchases was the only exam in the audit. Did not accrue use tax for taxes not paid properly to vendors. Okay, so that I think that's fairly reasonable. I did want to note that it looks like in this, and I don't know exactly what goes on associated with these edits and updates, but it looks like they changed the language of the petitioner, at least what I believe ALJ is saying, the petitioner is saying. Petitioner disagrees that its purchases of rental equipment is taxable when it is used to perform a non-taxable service, where they said if the job is performed for an exempt organization, and they got rid of even if. And an even if are not logically similar things. The equipment is never transferred to the exempt organization. While sales to exempt entities exempt from tax, and they switched it from non-taxable because of you've got different levels of evidentiary requirements, I believe, but again, that's touching the lawyer side of this, not the CPA side of this. But hey, they made this sort of update here. Is there anything else? In this case, none of the documentation provided established the petitioner gave sufficient documentation and information to the comptroller and received advice. This was detrimental reliance associated with an auditor email, if I recall correctly. Yeah, September 6, 200, oh my God. 2015 email from the Texas comptroller. So, let's actually read this in detail there. Petitioner contends it detrimentally relied on the auditor's email dated this date. Petitioner argues that it understood from the email that its equipment could be purchased tax-free for resale, that it could issue resale certificate for all its purchases or rentals for re-rental, and that the ticketed events tax on ticket sales would cover the tax liability. That is very interesting. Extremely interesting. I don't know if there's a situation where that would occur. I mean, if it wasn't, if you, yeah, I don't want to comment on it, quite frankly. It is possible that maybe something can do that, but off the top of my head, I don't want to speak to it. So this is a situation where we're going to an ALJ and we're saying, comptroller, your own auditor steered us wrong here. And the ALJ says, None of the documentation provided, even though they sent an email from the auditor saying it, gave sufficient documentation and information to the comptroller and received advice from the comptroller personnel in the form of a private letter ruling. So, you know what? This is more like, hey, are you being too narrow in your determination of detrimental reliance? Going off of this administrative code, I think there's a reasonable position against it. Oh yeah. But again, that goes beyond the scope of our stuff. Next one. Oof. I've got some notes here. That's always a good start. Audited blank. God, there's so much stuff. Okay, evidence. Petitioner offered the following exhibits. A significant amount of exhibits again. Petitioner operated a warehousing business located in several Texas cities. Oh, and the senior tax director was the person presenting this document. This wasn't it, at least to my ire and this documentation. It appears that an internal party presented this, and I want to bring up Texas Natural Resources Conservation Commission regulated entity information. This is another one where they start to touch more specifically on the issues of if something is required by a government entity, it should be exempt. Yeah, it's a hard issue to be dealing with right now, apparently. Because the comptroller's office is basically, and the ALJ is agreeing with the comptroller's office to say, you know what, none of this. You can show me this, but I'm not convinced. It's not clear and convincing, and that's just what it feels like. Oh, this one is fun. Here, petitioner requested additional refunds on sales tax paid, so we're starting here. To vendors in error, petitioner provided general ledger accounts with related transactions for requested funds. The auditor initially sampled the transactions and scheduled credits in exams 1000 through 1003. However, during the amended audit examination, it was determined that many of the refunds scheduled in 1000 through 1003 were reflected in the sample projections in 300 through 304. Therefore, the auditor and petitioner agree that those refunds credits already accounted for in exam this to this would remain, but the remaining would be detailed. Whew. Things have to screw up pretty bad for this specific scenario to happen. That's all I'll say. Jumping. Use tax paid on purchases. Petitioner contends the auditor erroneously assessed tax on purchase for which tax was paid, and that no error in the tax in the payment of the use tax, but only a delay in the timing of the sales tax payment on the separate purchases. This is very interesting. This specific claim. So they're saying, hey, we didn't pay tax on it, obviously. Yes, but if you look at our use tax filings, we took it later. And they took it apparently outside the audit period. And the ALJ is saying, hey, if you had done this properly, it would have fallen inside the audit period, and the payment of a tax would have deemed acceptable. So now we have a situation where the comptroller's office and the ALJ have both seen that we have documentation that tax is paid. It's paid like, let's just say, for example, 6 months in the future, and they're saying, no, we need to assess it in this audit. You basically need to go back and get a credit on that. basically, we need to make this situation much more complicated for very little reason. Very fun. Manufacturing equipment, vibratory feeders and conveyors. Hey, if you don't know about intraplant transfer stuff, this is something that you can read to start to get you there. The vibratory feeders is a very interesting one. They did say something different for scales. Petitioner has not shown that the various scales make or cause a physical or a chemical or physical change to the product, and has not met its burden to show the scales qualify for the manufacturing exemption. Although certain scales are exempt, petitioner has not shown by clear and convincing evidence that the sales at purchase are necessary and essential to the manufacturing or quality control process or otherwise qualify for the exemption. The contention should be denied, and they didn't put a period on that. Very fun. Yeah, this just I feel like the taxpayer side just needed to bake a little bit further, maybe get a little bit of outside counsel to help them put together a position that's not only reasonable to them, but would likely be reasonable to the comptroller's office and the ALJ. Oh, hey, this one, we're going to skip a little bit. This HVAC one, staff contends the petitioner provides no evidence that room 3 was used to blend chocolate chips. The ALJ disagrees. This is like one of the only times that the ALJ has disagreed with something in quite a long time. The ALJ finds sufficient evidence to show room 3 was used to blend chocolate. So, hey, it says they're a warehousing company. I don't know why they switched over to chocolates, quite frankly. So on this issue, is exempt manufacturing issue, and the contention should be granted. Amazing. Very happy for them. They've got dust collectors. This goes into the necessary situation. And let's just touch on this. The invoice stated work with Company M on facility to build. Appears to refer to this, does not therefore appear to be unrelated. To me, this doesn't seem like too compelling, and it's also $900. In a sample of that could be a few $1,000s, but there's something interesting there for someone, not me. Okay, that's everything associated with you, and that's all of the biggest ones. This last one's like slightly big. This is another estimated audit. They presented no evidence. Petitioner testified on his own behalf, but did not offer exhibits in the hearing. Okay. That's how you get a bad result. Oh, this is the auction. So this is an auction person, and it's an estimated audit, and they actually used a 6-month sample in this sort of audit. It's very, very unusual to my eye. So they do consignment auctions, and they did not have the business records for the audit. He recently sold the business and lost possession of the business records, therefore cannot provide them. They did provide the auction summaries, bank statements, and federal income tax returns. So they did provide what looks like a fairly significant amount of information. Due to incomplete records, it was estimated. A little bit of TC&R, nothing material. Well, technically material, but $3,400 is not that much money. The sample 6 randomly selected months from the audit period. It's so odd to see one of these in the wild, basically. It's part of the sampling manual. I didn't think people really did these anymore, just because it doesn't... It seems like a lot of work for nothing, but maybe it made sense in this specific instance. So the primary source of the error was the failure to include premium charges as a component of taxable sales transactions. So did he talk about the premium charges elsewhere? Because this is the interesting one. Petitioner maintains that this was a service charge for labor related to each sale and represented his income, not a charge for the item sold based on the evidence in the record. ALJ concludes that it is correctly a component. It is part of the sales price. I want to see his other one. Yeah, petitioner. This was at the hearing. Petitioner clarified his contention with the premium fee paid by customers making purchases. Argued that these charges represent his labor and were not related to the item sold. Petitioner argued that the fees represented his personal income that is taxed by the federal government, and therefore he does not believe is subject to Texas sales and use tax. That is the worst argument you could possibly make, but thank you for making it. Petitioner testified he knew of other auction houses that were not charging Texas sales and use tax on similar fees related to their auctions, and they probably had sophisticated counsel to get them to do that. That would be my statement there. Because I think there could reasonably be a way to set it up, but apparently this guy didn't go through the effort associated with it. Again, that's just my feeling. I don't know off the top of my head. One more. Oh, interesting. During the redetermination, the petitioner provided substantial documentation enabling the auditor to perform a sample audit and a detail audit. Okay. Okay. So this one sort of also changed in the middle of the hearing. Interesting in that respect. We've got, that was the heavy stuff, now the light stuff. Fireworks. Texas sales and use taxes due on all fireworks sales now. There you go. They repealed the fireworks tax. Now you have sales tax on it. There are certain days that you can sell fireworks. It's here. Consignment sales. This is interesting because I pay like literally zero attention to fireworks. Consignment sales are which the purchaser pays the distributor only for items that sells. So like, you know, those it's like stands out like at the side of the road, buy like one get 50 free or whatever. It seems like very likely that those are all consignment sale type things, and I just never thought about it. I think it's interesting. Exemption sales. You can Rotary clubs, chambers of, what is a Lions clubs? What the heck is this? Lions Club International. What are you? It's an international service organization. I have no idea what this is. In times of adversity, what are you talking about? I've gotten no useful information from this. Okay, but if you are one of these probably irrelevant organizations, you can get it too. Resale certificate if someone else is doing it, blah, blah, blah. Okay, that's what's going on with fireworks. Last one. E-cigs. This one's very fun. And you see it's very short, so thankfully we're just about done with this. E-cigarettes are this. Are e-cigarettes subject to cigarette tax? No, they're not. They don't meet the statutory definition. Are they subject to sales and use tax? Yes, they are. Does the wait? Can they be sold through vending machines? I'm actually quite curious. I stopped at this line right here because it's the last yes no one. May sell it from a vending machine if they hold an e-cigarette retailer permit for the entire commercial business location at which the vending machine is located. Oh, an e-cigarette vending machine owner is not allowed to sell e-cigarettes at another place of business because the vending machine itself is not a place of business for which the e-cigarette retailer can get a permit. Okay, cool. I had no idea. Even after reading that, I just sort of ignored it. So, if you didn't know, e-cigarettes are not cigarettes. They're taxed slightly differently. It matters in convenience store audits. I don't think it really matters anywhere else. But I think I switched the scene there. That's everything. That is everything that came out of the register, the comptroller's office in the form of STARS documents. If you have any questions or have any comments associated with it, I would be very happy to hear it. Thank you very much. Bye.